God, it never ends, Stephen, for your resident economics and business editor. A massive day yesterday. Why? Because a new inflation number came out yesterday. Let's have a look at that inflation number. I've got a little graphic for you. In July, during the year to July, inflation was 6.8% in the UK, still many times more the Bank of England's 2% target. There was a consensus before the inflation number yesterday that it would go up to 7.1% in August. Why? Because we had big increases in petrol and diesel prices, the sharpest monthly increases in 23 years, believe it or not, off the back of high oil prices. But when the numbers actually came out yesterday morning at 7 o'clock, it turns out that inflation in August was 6.7%, so down marginally from July. And the government was hugely pleased about that. There was concern that inflation would be rising, but it actually fell. And so now it's all eyes on the Bank of England. At 12 noon, I'll be standing outside what they call the old lady of Threadneedle Street, come rain or shine, reporting on the latest decision by the 9 economists who make up the Monetary Policy Committee. And you're right, Stephen, it does seem that even though inflation has fallen, that the Bank of England is likely to implement yet another interest rate rise, the 15th in a row. Back in December 2021, interest rates were ultra low, 0.1%. You could borrow money basically for nothing. They're currently 5.25%, and we're likely to hit 5.5% today. And that will have a knock-on effect, unfortunately, for those with variable rate mortgages and personal loans.
I mean, it's a good thing, isn't it, for savers, Liam? But as you say, the brunt of this is going to be felt by the housing market.
It's the housing market, Ellie, and it's also business. Most businesses have loans that are on a variable rate. And so this will slow down the economy. And our economy has never really got out of second gear, if you like, since the end of that COVID pandemic lockdown. There's going to be a lot of criticism from the Bank of England for the Bank of England today if it does indeed raise interest rates. People like me have been saying for months and months that the Bank of England should have been pausing interest rates, because every interest rate rise they do, and they've done 14 already, it takes up to a year to 18 months to feed through into the economy. And so there's a sense that the Bank of England now is increasing interest rates too much to overcompensate for the fact that a year or so ago it was very slow in raising interest rates and it didn't take inflation seriously. Look, these are difficult issues for any of us to get our heads around, but the reality here is we are likely to see another interest rate rise today, unfortunately. A chink of light, it may be that the Bank of England signals to the market, signals to the rest of us, they do think they have now got their arms around inflation. Inflation is coming down, so they may signal this is probably our final interest rate rise.